Alright guys, let me know if I am audible or not. Let me know in the chat. Audible and visible. Alright. Alright, let's wait for other people to join in. Then we'll start with the usual proceedings. Market is actually really good in spite of the index not moving up. A lot of stocks are setting up and moving up very well. Pretty good start to October. Already October. Small cap looks nice. Yeah, it does. But I need Bank Nifty to start moving out. I need Bank Nifty to start getting out of here. Otherwise, the small cap might just come down again. A lot of different things can happen. We look at everything today. Let's see. If you have any questions, you can put it on the chat box. I will get to them. Also, please like the stream as well if you're already in. Okay, so what's up? What's going on here? So one key thing which has been happening with me. So one very major thing that has been happening with me is whenever I try to chase momentum, even by a bit, kind of start kind of goes wrong every single time, especially in the current market. Any attempt to chase momentum, so this is the demand zone, right? So I bought somewhere in the middle. So any attempt to chase momentum is not working out, and any attempt to just wait for the price action, it's kind of working out. So this is the first trade which I've taken in like 4 or 5 weeks, which has gone significantly below my cost, if I remember correctly. I don't really remember any other trade going like 4% below my cost without taking me out. So kind of a telltale sign here that it shouldn't be doing this, shouldn't be buying here if the demand is here. And these little things add up. I have always talked about it. These things will add up extremely fast. All right. So it's not just that you are having to go through this, you're also missing out on something else which is working. So let's pick a random. What is up today? This one. So this was a very good entry today itself in the morning, and I didn't have any money for it. So it's like a double whammy. All right, you are getting kind of hooked on two sides at once. So try to optimize your timing as much as you can. Don't wait around. The small cap index is not like this all the time. So don't wait around. Also, if you've joined just now, please like the stream. It will help with the live audience as well. And another one which I missed. So actually kind of lagging a bit. with my trades in the current market. So this is also missed. This is also gone. But what will I do? Will I buy it here because it looks kind of good? I won't, because if you see, uh, from this point to this point, it's already 5%. So, and I won't cut it out here. All right. So I am not trying to look at a 5% loss and not cut it out. All right. The maximum I can do is like 3%, maybe 4%. But 5% and still having to wait for a breakdown, that is not what I'm trying to do. So by the time I'm exiting, it will be 7-8%. So you guys think it's easy to exit just below your uh, just at your stop loss? That is not how small caps work. All right. Uh, if your stop loss is here and you are entering here, so if the distance just above your stop loss is, let's say, 5% here, all right, 4.94, so almost 5. By the time you exit, you will exit here, like 6.5%. So try to keep that cost as low as possible so that you can give some room for a wick. You can give some room for a wick like this. All right. You don't want to just buy here and get out on a wick at 8% negative, and then your stock simply just comes back up. All right. This is not Nifty. These things happen every single day. All right. So I'll show you an example as well. So in this entire area, I could have entered here. I could have entered yesterday as well, but my stop loss is below this area. So my entry was somewhere inside these areas. All right. So I am trying to stay as close. If it goes without me, I couldn't care less about it. All right. If you don't even know what the company is doing, how could you care about missing a breakout, right? So this is a major problem. People don't know, they're buying a stock, they're trying to chase the breakout. They don't even know what's going on in the company. They have no idea about what the company is doing, and they're worried about missing a breakout. You should be worrying about knowing more about the company you're buying. Anyway, so yeah, so try not to chase moves. All right, wait for your entry. You will be rewarded accordingly. And the major point is, you get an immediate move from your entry. So see, this one also I bought somewhere here, right here, and I knew very well that my demand is right here. So I was mentally ready to see a 3% loss because it's just 3%. All right. So if you're not aware of where the stock can react from, you will end up exiting here. There is no question about it. All right. So instead of just buying here, just shift your entry to inside the range. You are automatically safe. I could have actually bought it right on this wick right here, because I was watching it right here. I was waiting for a breakdown. I could have bought it at 70 instead, and my cost would have been way lower. But still, it's lower compared to maybe buying here. All right, where just on this dip you are down how much? 6%, 5%. All right, almost 6%. So so don't chase. All right, don't chase. Just by not chasing and sticking around the zones, you will do yourself a very big favor. All right. Also, people who have joined just now, or maybe in the last 5 minutes, make sure that you like the video first. All right. So small cap. All right. 43,800 to 44,000 on Bank Nifty. That can be considered as demand. Okay. So I think you are talking about this area right here. If it's Nifty Bank, this is your area of demand. Yes. But the point is, why are you looking at demand right now? So why are you trying to look at demand zones when the trend is clearly on the downside? So there have been multiple demand zones here as well, here as well, here as well. Everything is getting broken. So in a downtrend, the demand zone doesn't matter at all. If you keep looking at demand, stick to this rule. Don't be surprised if the trend continues. All right. So if it's a downtrend and my last supply is somewhere here, even if it pulls back all the way to the supply, I won't be surprised if something like this happens. I don't want to be surprised. I would be surprised if the trend breaks. All right. Don't be surprised when the trend continues, even if the pullback is very deep and you still think that the trend is down, because obviously nothing has been broken. So until the last base is broken, I am continuously expecting uh, it to trend. All right. I am surprised. Let's say this is my last base. All right. So I am surprised by this fall. This just does this candle right here. All right. I am not surprised by this gap down, this rejection. None of this is surprising to me because I want to stay in the direction of the trend. So all of this, if you see, all of this right here, all of these moves, I don't. It's just I am expecting it to happen. What is surprising to me is this breakout right here. The trend suddenly changed. All right. So I am only looking for a surprise in the opposite direction, because if you keep expecting every counter trend zone to hold, you are getting whacked around in this entire big move where you could have made the money of your maybe 3 months in one single month. All right. So be very careful. Stick to this rule. Don't be surprised when the trend is continuing on one side. You want to be uh, surprised only when the trend breaks. And see, this is the base here as well. So this move I'm expecting. This breakdown I'm not expecting. But as soon as it breaks down, I'm now expecting the continuation. Immediately switch sides. All right. No bias, no nothing. I'm not here to prove myself. All right. So it might look like a very smart thing when you are uh, predicting the break of a trend. All right. When you're predicting a reversal, but whatever money you're making, it's not written over that money if you are smart or if you are sort of a easy trade. All right. It's not written that it's a tough trade, it's an easy trade. All right. So it's basically an ego game. Stay out of that. Just stick to the trend. You will make most of your money in the direction of the trend, and it's not even close. The amount of money which you will make in the direction of the trend. All right. So demand zones only when it's going up, supply zones only when it's going down. All right. So all right. So that's enough of a talk about the trend. So this is a demand zone. There is one demand zone here, one here as well, one at today's day low as well. I don't care, to be honest. All right. This is your demand zone. I'm only looking at this supply, and that too in futures, which hasn't been broken yet. So this base right here, that's it. That is the only thing I'm looking at. So if you see on Bank Nifty, it's still kind of bearish, but Nifty, kind of a surprising move. So again, reaction from the supply did not stick, broke out, and now we are sort of back in a range bound. So now what am I watching at Nifty? This demand zone. That is it. Nothing else. Nothing in the left side. No this base. No, none of that. Just this demand zone for the immediate move. If this breaks, then I'll see what's next. All right. Trust me, you will maybe lose once. Maybe this breaks once, twice. But as soon as it starts moving, game is over. All right. You will make it back, and you will make back much more. So just stick to the rules. All right. So this is going up here. So again, see, same thing. Demand zone is holding. So I bought this stock. I bought this stock at 1800 something. I think 1790 something here. All right, somewhere here, and I was at a loss of 5% or 4% at the lows, but I'm waiting for this reaction because I'm very confident about the zone, right? So, and now it's back almost to my cost. So just know your points. Divide the chart into just your reaction points. So if you see this chart, this is my supply, this is my demand. That is it. I don't care about anything else. So until this is holding, it's bullish. Whenever it works out, things will just take off. I'll show you an example as well. So multiple examples. We traded this stock very recently, very quick move. So this move. So till this zone is holding, I am not worried about any wick here. So there was one wick, second wick, third wick, and a fourth wick. So every single day, imagine you are holding a stock. Every single day you are looking at it going up and then it is coming back down. So I'll show it to you. So look at what was going on here. All right, you're looking at the stock going up, coming back down with a day end, going up, coming back down, going up, coming all the way down. All right, again going up, closing below the day low, and it shouldn't phase you. It shouldn't uh, bother you, because in the broader scheme, this supply is this there is a heavy supply here. So as soon as it's gone, the stock immediately went to upper circuit, and that was the trade. You bought here. In 1 week, you made 30%, 25%, and you're out of the stock. All right. So stick to your zones, stick to your rules, and first of all, you have to make rules, and to make rules, you might have to uh, take a few losses. So if you're very new to this game, um, don't jump in with a lot of money at once. All right, just because the market is going up. So another main point which I want to talk about is, in a bull market, when the market is going up like this, every fault is forgiven by the market. All right, whatever you do, you will suddenly end up in green. All right, more than half of your stocks, you will end up making money, because that is the nature. If you pick up any random stock, it has gone up in the last 6 months. Anything, if you see anything has gone up, right? But the point is, the real skill is not making money here. Obviously, there is some skill to it, but the skill is to actually deal with something like this. How quickly you can get out of a market like this. So during this time, how quickly can you recognize it and pull out of it? All right, that is your major skill. If you're able to stay out of these phases in the market, all right, it's very easy to make money here. All right, something is about to go up every single year, multiple times, multiple x returns. All right, even a stock which has fallen below the COVID low, that is going up. All right, so this is what happens in the bull market. But are you good enough to maybe buy the stock here and get out here, maybe, or maybe get out anywhere in the middle without getting stuck in this fall? All right, so if you're buying here, you have to, the proper exit is right here. All right, most people are waiting for this breakdown, which is also all right if that is your trading strategy, but holding beyond it, that is where people will lose most of their money. All right, because when the bear market comes, you've already seen it. People who have been trading since 2022, early 2022, you've already seen it, how bad it can get. So your main skill is to be safe here. All right, and to stay out, to not take bad trades. Making money in a bull market, everyone does it. You will see everyone is making 50% in the last 6 months. All right, so take it slow and exit early. I'll show you one more example before discussing it. Let's look at this one as well. So let's look at this example as well. So this stock I have already talked about it. I bought in this week and I bought something here as well. And I was out on this red candle. All right. So from there on, it went down how much? I say 10%. All right, 8%. So it went down 8% here. And it's been about one or 2 weeks since that has happened. All right. And just now it's going back up because obviously there is a big cluster of demand here. But during this time, during this exit, so if you see, this is my exit somewhere in the middle, and the same day, it's 28th. So somewhere around that time, I bought this as well, 27th and 28th. All right. So by the time it's coming back up from that demand, I have already made more. I mean, 4 hour more. All right. So this is how you can optimize in a bull market. You don't want to hopefully stay in a stock expecting that it will go up with the index, because this time is not going to return. If it goes on for, let's say, 6 months, it is not going to return whenever it ends for at least like 6-7 months. All right. So you don't want to keep holding stocks like this where it's going down, going back up, breaking a high and coming back down, then going back up. All right. You want to continuously trade these moves. All right. So if you keep holding one thing expecting it to give you multiple times returns, you are very, very dependent on the market for that. All right. If the market stops, you are done basically. All right. The stock can come down, anything can happen. So especially in a bull market, in a bear market, or maybe in a market which is coming down, maybe in a pullback, you can hold your trades because you know it's a pullback, so there are no good opportunities out there anyway, right? So you can hold and maybe wait for the reaction from the demand. But in a bull market, holding is just wasting your time. If I show you the average return of a stock, it's not more than uh, how much? Let's take this stock. So let's say this is a buyable point. So it made a high here 3 months ago, 2 months ago, August beginning, and it's still here. It can maybe break out here and give you 50% more, but just exit on a climax move and buy again maybe here. You don't want to wait around in a bull market because you are wasting all this time. All right, you are wasting all this time. So we were watching Adani Ports, right? So Adani Ports again. See again, look at the structure of this stock. So I've talked about how we need a rounding base for a big breakout. Now look at what this stock is doing. First of all, a big fall from the highs. The high is not tested, so there is no proof of demand. Stock is only sideways. Secondly, the demand zone is here, this area. All right. So let's say, let's give you an example. So how does this really look like? So let's say you are bungee jumping. All right, you are jumping from a cliff with a rope attached to your body. So this is your bottom from where you will bounce back up. You are expecting yourself to bounce back up from here itself. All right, in the middle of your fall. This is what this structure basically is. There is no support here. The rope is entirely loose. There is no tension in the rope, and the maximum tension is here. So what is safer? Like clearly just bouncing from here on. All right. So this is what a demand zone does. It acts as a very sharp reversal point, very sharp change of character point. All right. The stock can come here and simply just take off if there are enough buyers. But from the middle of nowhere, you are just taking a shot in the dark. All right. This contraction, I mean, so much misconception regarding contractions. The supply is here, tested it for the first time, and the demand is here, which is not even tested. So this is not a contraction. All right. This is not a contraction. Contractions work from demand zones. Contraction works when demand overtakes supply, not when things just go sideways in the middle of nowhere. So please work on these basic concepts. Otherwise, you will. It's not. So I'm not saying to work on those basic concepts because it's wrong. It's not a very profitable way to do it. You might make some money, but it will be very psychologically kind of torturous, to be honest. All right. So, all right. Bajaj Finance. A lot of questions about Bajaj Finance. What is going on in Bajaj Finance? Okay. So Bajaj Finance, nothing is going on. Probably a big monthly base, I think. Yeah. So nothing exactly is going on here. Just the usual uptrend. No, nothing is tested. Simply just going up. In this area, everything was tested. So if you see all these wicks, everything is tested. But right here, don't buy it. Can break out. I'm not saying it cannot break out. So if you're a regular viewer of the lives, you know when I say not to buy it, it does not mean that it's bad for a breakout. It can break out. It's just bad as a trading thing. If you're holding it, obviously it's excellent. All right, it's going up without a pullback. That's excellent, but no entry here for me. All right. Yeah. So okay. So we might have something going on here, but if you look at the range of these candles, I am not very sure about this. Yeah, I should be audible again. Yeah. So this is your zone. This is holding. It's kind of decent. I wouldn't buy it here, but maybe a nice wick into this area maybe calls for a buy. So you can look into it. Not bad. But right now I wouldn't buy it. Below 108. Yeah, probably somewhere around 106. Maybe a nice sharp wick into the demand. That works. All right. Kothari Petrochemicals. Nothing here. Don't buy it. This is the supply. This is your demand. Actually, demand is coming from this point. So don't buy it. You're buying very far. All right. Not the best chart. Obviously, it's bullish, but not an entry here. Star Cement was one stock which I was actually looking at. Where is Star Cement? Okay. So yeah. So Star Cement, maybe you can start buying it. Maybe. Also, guys, don't just rely on my analysis. Do your own thing. All right. I'm just here to differentiate between different structures. That's all. Cements, I think cements are doing good as well. You can watch other cement stocks as well if they are kind of setting up. So let's see. Okay, maybe not. They were doing good like 2 weeks ago. Okay, this is doing good. Okay, so maybe some mid cap cements are doing good because large caps are not exactly uh, doing good here. Also, again, for the new people, make sure that you like the stream as well. It'll help with the reach. NSIL. Okay, NSIL is a very illiquid stock, so I cannot talk about it. It's a very liquid stock. Stay informed about that. TCI Express. So TCI, just TCI. So this was actually a very strong stock back in 20 years. So look at this. So extremely strong stock back in 2021. Kind of a strong stock in 2022 as well. But now I think it's getting ready for a move again. So yeah, decent chart, not bad. Doesn't look bad really. Sapphire Foods, all right. So I've already taken a hit in Sapphire Foods. Don't buy it. Don't buy it. So I bought it somewhere here, if I remember correctly, and I was out here. So don't buy it right now. If you see very carefully, it's very downtrending. So it's very downtrending on the hourly, not exactly sideways. So don't buy it. So Bank Nifty also for the new people, we are at a daily supply, so don't jump into longs. All right. Wait for a breakout. Also, a lot of people I Okay, so a lot of people are afraid of missing out on the first breakout. So whenever I'm looking for a trend, whenever I'm trying to judge a trend, I am always waiting for the first move to happen. So um, let's look at this one. All right. So this is an entire downtrend, and when I'm looking for an uptrend, I am not buying this thing here. All right. I am letting this move happen. The first move, just let it go. Just let it go through. All right. Then if it pulls back and sets up, then you look for a long-term trend. Don't jump in on the first move itself, because again that's counter trend trading. Even after a breakout, so even after this breakout, I am not jumping in or you looking at these wicks. I am waiting for the demand to get tested. There is a tiny demand here and another one here, and then I'm looking to capitalize on these moves. All right. So so don't be afraid of getting maybe caught in this candle, because what's coming next is much worse. So So whenever you are seeing a pullback, take it seriously only after the first breakout. Don't jump in. So I'll give you another example which I posted on my server as well. So if you see, there is a big rejection from this supply which happened like 3 days ago, 2 days ago. And I was not worried because my zone is right here. So only I was ready to take a loss if there was a breakdown here. All right. Uh, because that indicates that maybe the trend is completely done and now we can chill out for let's say some point here. All right. But if I would have reacted looking at just this candle, then I would have missed out on so many nice trades which happened just after this move. All right. So just wait for the first move to go. Don't be afraid of the first change in trend, because much worse things can happen than a first breakdown. All right. Malcolm. Malcolm India. Again, I think this is a illiquid counter. Yeah. Yeah, I cannot talk about it. If the candles look like that on the smaller time frame, I am out. I don't want to pump a stock for no reason. Arvind Fashion weekly chart. Okay, this looks good. This looks good. Yeah, this looks good. This is also on my watch. This was on my watch during this time. It went down. Now it looks kind of good. So yeah, this good. This is good. This is a good chart. This is a good chart. A lot of fashion stocks are also kind of setting up. So this one as well. I think this is also going up well from the weekly EMA as well. And the line which I've marked is a monthly demand, so you can ignore this. But a lot of fashion stocks are kind of setting up. You can look at fashion industry again. All right. Oil India and GPPL. Okay. Oil India again extended. So again, the same thing. You are trying to jump off from thin air. This is your demand. Okay. This is again done. If you're holding it, exit, because the next stop is right here. All right. So one fine day, you will see something like this and exit it. And I think Gujarat Themis is also went up a lot. We talked about it here. Nice move. I think it's a 20-25% move. How much? 30%. Okay. We also talked about a few stocks in the last live which are doing great. We talked about this one. It also reacted from the demand zone itself. Um, and the target was this supply. So it's already done. Um, what else? What else did we talk about? Um, okay, let's see. Talked about a bunch of stocks which have gone up well. Okay, so ATM. All right. ATM is gone. So I watched this stock in the morning today. There was a nice entry right yesterday maybe. So now it's gone. Don't buy it. Don't buy it here. Um, so look at how much time it is wasted, far from the moving average. This was a nice setup. Now it's gone. But the chart is good. If you want to look for some example, this is the entry point right here. If you see on the hourly, it's probably coming out of the hourly EMA as well. Yeah, so look at this. Dip into demand. Nice move. All right. So this is a good chart. Okay, this is pushing now. All right. So PDM was decent. Okay. Rama Steel Tubes, Jindal saw. Yeah, don't do it. So, I mean, the diagram is already self-explanatory. I think someone has already asked about it in the previous uh, live. So this supply right here, nice pullback, a cross sign as well. Not to buy it here. Pretty neat. Don't buy it. Still nothing here. All right. So, all right, Rishabh and his analogies. All right, analogies, whatever it's called. So the point is, uh, okay, let's look at stocks. Rama Steel Tubes demand and supply zones. All right. Rama Steel Tubes distribution. Distribution in Rama Steel Tubes. So, so yeah, this was a supply right here. It's already marked. We probably have talked about it. If you're holding it, I think you're still holding it because you are very concerned. You should have exited right here. This candle should have been it. All right. Um, if you're still holding it, I would suggest you to exit and maybe buy something which is not falling. Um, yeah, that's about it. This is not good. Distribution or not, it does not matter. If it's falling, I am out. It can be the biggest fake move of all time. All right. It can be something like this: drops into demand, looks like a breakdown, but the demand is not gone. Immediate spike. I couldn't care less. All right. If it's falling, I am out. So if it's falling like this, I am out. It can go on for 10x from there. I'm cool with it. So if you're holding it, maybe exit and buy something better. Colgate again nothing. So avoid these stocks where you see a spike and it's contracting at the lows. All right, avoid these because would you buy something? So how does this look? It looks something like this. Fallen went up and now it's like this. So how do you know where it's going to go? Nothing. All right. So avoid this. If it has to go up, how will it set up? First of all, if it has to go up, it will go up anyway, doing anything. But how do we want to trade this? We want a nice move somewhere into the supply. Then we want a dip and a wick here. So something like um, a move here, then a nice wick here, and this is where we start to get in. When we have solid signs of a bullish move. So something like this. We get a dip into this area and we start to push up. All right. So yeah, don't buy stocks which are, let's say, V-shaped fall and they are just sideways. That is not a good trade at all. All right. So after the live, my charts, when I look at them, when I when I try to scan them later on, all the markings look like battle scars. It's like Um, like they've come out fresh off of a multi-day war. If every single chart I open, there is something or else already marked on it. Looks kind of ugly though. So let's move on. Everest Industries. Okay, Everready Industries or what was it? Okay, Everest. Okay, there is a question about e-mudra as well. E-mudra. So I have already told you guys to avoid flat bases. It has been flat for multiple weeks now. Might go up, but make sure that you know that the demand is here. So again, another wick shouldn't be very surprising. Wait, this is spiking. Okay. Okay, so Everest Industries. So there is something marked on this as well. Yeah. So this looks okay now. Not bad. Not bad. Probably talked about this as well. This is kind of it looks okay. Again, this is your demand. This level right here, 1080. Menon bearings. Okay, nothing here. Don't buy it. The demand is too far. It has already tested it, but might spend some more time here, so you can avoid it. You can find something better here, I'm sure. Good chart though. Chart is obviously bullish. You guys have kind of stopped asking about bad charts completely. Okay, Chennai Petro. Okay. Yeah. So, what about it? It's falling. Demand zone is somewhere here. This demand is already broken. It can easily come down all the way here. Avoid it. Genius power as well. It's falling. Avoid genius power. So, main question: how do I scan stocks? I have a list of all stocks which are above 1000 crores in market cap, and I go through all of them one by one. That is how I scan stocks. I look at every single chart almost every single day. Almost, maybe once every 2 days. So that is how I can scan stocks. If I find uh, multiple stocks from the same sector setting up, I will prioritize those over one-off stocks. All right, maybe something in one sector is setting up, but the rest of the sector is going down. I wouldn't buy that. Sectoral analysis is key for me. So, what stocks am I watching? Basically, all of them. Morarji Textiles. Okay, my bad. Just a second. Yeah, avoid this. It looks good 8 months out of 12. I've already talked about this. So it looked good here, it looked good here. All of these areas look good. This looks good, this looks good, but how much has it really moved? So very large caps like FNO stocks, FNO large caps, Nifty 50 stocks, and very small caps. They have one thing in common. They will move at once. All right. Maybe in a large cap, there is a sudden trigger for growth, and suddenly the stock starts to move. Something like an LNT. So who would have thought LNT would have gone up? It was always on our watch. We were already talking about it here, everywhere. This area people bought it as well. But who would have known something like this will happen in LNT? All right, no one. Similarly, small caps as well. Sudden trigger for growth. Extremely small caps. I'm not talking about consistently growing small caps, because then by the time that consistent growth kicks in, they're already mid caps, or maybe not micro caps at least. But micro caps, they will go up suddenly. All right. So avoid the extreme ends. I would say 500 crores plus to somewhere around 3 to 4,000 crores is my sweet spot. So this is the market cap where I would buy stocks. All right. All right. So let's take a few questions quickly and then we will conclude with the live as well. Again, if you have not liked the video, make sure that you like as well. Lotus Labs, avoid it. You don't want to get in on the recovery. There are much better stocks which are already going up. Structure is good, but the context, the entire overall trend is not good. Big block is also gone. This is also gone. Don't buy it. Uh, Edgy Infra. Edgy Infra is okay, not bad, but again, same thing. Big spike and a big move down. So I don't like buying these trades, to be honest. I don't like these big pullbacks when I'm looking for a long trade. All right, Havels again. I would suggest you to avoid Havels. Not a very strong mover. All right, moves once every 3-4 years, but um, avoid it. I mean, it's kind of extended. Avoid it. Structure is good, but you can find better mid caps or small caps. Sucker Health, all right, Sucker Health or whatever it is. Demand and supply zones. So again, if you're having trouble with demand and supply zones, just take the last high, and this made the last high. So this is your demand zone, and supply zone is right here, the big fall. So this is my range. All right, just take the last high. Again, if you see before this entire thing, what was the last high? This was the last high. So where is my demand zone? Right here. So where does the move come from? From the demand, not from this random contraction. All right. Same thing across every single script. It's not even uh, slightly different for anything. All right. Kolte Patil Developers. This is decent. This has been a strong stock recently. Uh, Consolidating for some time. Kind of a strong reality stock. You can look into it. All right. Nifty IT. Yeah, Nifty IT has been pulling back. Let's look at it. Good one. So sharp move here. Demand zone is right here. This wick is right here. Nice move. And now maybe it's trying to go up. So I am personally buying only small cap and mid cap ITs. If something sets up on the large cap, maybe you can look at it. I would suggest you to not waste time in large caps, especially IT large caps. Those are the worst. Tata Coffee, nothing. This is a demand. There can be a spike till the supply, but I would wait for more range. This is the first up move, so don't buy on the first up move. So if you look on the hourly, it looks like the first up move in this entire trend. So let's wait for another one and then a higher low. Right. All right. So okay, not moving now. Deepak Fertilizers. All right. Nothing. Too extended. Fell down very hard because of the chemical downtrend. Avoid this. IEX is also horrible. Repco Home again. Nothing. This is my demand. It's floating way above demand. Don't buy it. Lloyd Steels. All right. Yeah. Yeah. Lloyd Steels. Actually, uh, we are in it. So this is a good one. Yeah. Bought Yatharth at 390. That's too late. 390 is too late. 390 is right here. Demand is right here. I discussed Yatharth at 375 on this day. 360. So this day right here. This is where I was talking about it. I think the last live was 29 September, and this is exactly where I was talking about it. You have bought in too late. You have bought it here, or maybe here today. So too late. Look at where all the wicks are. The demand is coming from this base, and this one as well, obviously. So too late. Can work on your entries more. All right, last two stocks, and then we will close it. Well, Enterprises looks good. Again, it's reacting from the top of the demand. I would have liked if it did one shakeout, but maybe you can try it. Tata Motors, yeah, looks decent. Will I buy it? No, because too many people are watching Tata Motors. Looks good though. All right, so let's have a look at the index and then we will end it. So Nifty is holding up. We talked about the zone. Nifty is kind of bullish. Bank Nifty is not holding up. So be careful in Bank Nifty. There can be a breakdown. I'd be surprised if Bank Nifty breaks out. So it's at this supply right now. There can be a breakdown. Nifty can also pull back to the demand. So watching out for this. All right, so we'll end now, and hopefully you guys learned something. Share the video, like it as well, and I'll see you guys in the next one next Friday. Have a good weekend.